Satyanarayana Raju, Executive Director with Canara Bank, joins us, and let's connect with him. Mr. Raju, good morning. Thank you for joining us. Now, first, the NIMs. They breached 3% this quarter. They look strong, but with deposit growth in focus now, how sustainable are 3% NIMs in the near term?
This current financial year, we are given a guidance of 2.90% for the NIM. For this 9 months period, we are already at 2.93. Particularly specifically for the third quarter, our NIM has crossed 3 and 3.05 as on December 31st. You look at that, our rate of interest, what we have paid is 7.7% and senior citizens 7.5%. That throughout the quarter, it has having a little impact on my NIM because simultaneously there is an increase on the yield on advances. Our yield on advances has increased more than 21 basis points. That is helping a lot on that. So our overall, our guidance for the NIM will be in and around of 3%.
Sure. But your recoveries, they continue to pretty, hold steady. The last we spoke, you had guided for about a 15,000 crore rupee recovery in FY23. Going forward, what kind of trend can one expect?
Generally, what we are telling for the last quarters, our guidance is whatever our slippage is, our recovery should be more than that. Look at that the quarter 3 results also, our slippages are 3,048 crores. Whereas our cash recovery itself is at 3,080 crores. If we add our upgradation of 940 crores, the total reduction in the NPI is more than 4,000 crores. This tendency will continue in future also, but our more thrust will be on slippages. So that's why we are reworked on our underwriting standards on various RAM schemes and close monitoring on the SMA 0 itself instead of allowing them to a SMA 1 and SMA 2. Our even stress assets total overall above 5 crore, if you look at that, it is only a 0.74%. So that has given a cushion for us, and that the same tempo will continue. And our main focus will be on slippages. Slippages quarter on quarter, we want to show a better results, and automatically simultaneously our aim is to see that our cash recoveries are more than our slippages.
Now, we've heard commentary from the top 3 private sector banks, Mr. Raju, and it indicates that select corporate lending is seeing some mispricing. What is the risk profile like according to you, and are you seeing strong competition?
Actually, our strength is our fast decision. The corporate book, our corporate book has grown because of that, our fast decision in the maybe yes or no, that is helping us in that. But we are not compromising on the price. Price-wise, there is no compromise. That is the reason you can look at that. Though the last quarter, our growth in the corporate is comparatively higher than the RAM, our yield on advances still we have improved from 7.21 to 7.45.
Good morning, Mr. Raju. Now, if you were to look at your corporate loan book, you're of course also lending to infrastructure and NBFC. What's the risk appetite when it comes to this?
The infrastructure, we are lending to only HAM projects. In HAM projects, there are certain guidelines we have kept inside within the policy guidelines that whatever the margin it is to be contributed by the promoter, 50% of the margin should come from upfront. And our the lending should not be more than 50% of the total project cost. And it should be only the promoter company should be A and above rated companies. And we are also insisting personal guarantee in those things in addition to the corporate guarantee. And average yield on that also we are stipulated a minimum 8.5 to 9%. That is the average yield we are insisting on that. Actually the repayment is ensured directly from the NHIA. That's why we have taken exposure in the HAM projects. Other than HAM projects, we are taking in generally the data centers are coming out. In there, we are looking at little more. Otherwise, we are cautious on that infrastructure fund. In somewhere, we have taken exposure in the even energy saving like solar energy and all. These are also we are focused more on A-rated companies. Look at our corporate lending. So that's our exposure is 78% of corporate lending is A and above rated, and triple B is on 12%, and the double B and below is only at 10%. There is a drastic reduction in the double B and B from the last 1 year. It was a 15%, now it has come down to 10%. That cautious lending is there in the infrastructure. Regarding NBFC, the NBFC growth, it looks that we have grown well, but that majority of the growth, it has come from the central public sector enterprises. So even in NBFC, our exposure to the corporate is 98% is A and above rated, and the remaining is only 2%, madam.
Your provisions for 4,000, you have in your provisioning of 4,000 crore, you've guided for a credit cost of about 1.5%. Any specific amount which has issues in the quarter gone by, and how do we expect normalization there?
It's a nothing. It's a routine. There is no specific account or a big account has slipped to NPA. Even the third quarter, not even a single corporate account has been slipped to NPA. Entire slippage, those 3,000 crores, it is from the RAM sector only. And in the current quarter also, we are not expecting any big slippage from a corporate.
Right. Your ROAs, though, are inching up. By FY24, can we expect the ROAs of, say, 1%?
The way we are growing from the last 1 year, we have started from our journey from 0.5 to now we have reached at a cumulative 9 months is 0.76. So in the same way, we are confident that we will continue to grow in that return on asset. It may be 1% or 5 basis points here and there by the end of the next financial year.
Appreciate your time, Mr. Raju. Thanks so much for joining in and giving us that clarity. That's the word coming in from Canara Bank, the FY23 guidance at 2.9%, and the yield on advances, it has gained about 21 basis points. The management saying that slippages will be less than recovery.